Mineciğim fotoğraf çekilirken teşekkür ederim. Şaka yapıyorum ya.
Sorry.
Where did you go? I think we could start, no? If you wish, we could start after the...
We're waiting for the waters, I guess.
We were waiting?
Waters.
Do you want water?
And also green light from the
But, do you need it to stop?
Hmm?
Do you need it to stop?
Yok.
You could keep it on, no?
Gerek yoksa.
Yeah, let's make it. I mean, let me speak like
Bir
for
tane
45
daha, bir tane
minutes.
daha getir.
No. I mean, even if you're not speaking, it's fine.
Biliyorum.
I think
Nasıl
it's okay.
yapacağız bunu? Ben o zaman sana hareket mi yapayım şöyle? Tamam. Ya da açık kalsın ya ben şey yapayım. Tamam. Yok kalsın.
So I can have a chance to jump in while you guys are...
Çok teşekkür ederim. Rica ederim.
Ses. Good afternoon. In this session, we will discussing the financing angle of wind and battery investments. So the session will be held in English. We are having an esteemed guest speaker from London. So Mohammed is with us. He's from JP Morgan. Before starting, I would like to introduce myself first. So I have been working for Enerjisa Üretim for more than 5 years. I joined Enerjisa Üretim back in late 19. Prior to my experience here in Enerjisa Üretim, I worked for İşbank for more than 6 years. So I'm an ex-banker as well. So I cut my teeth in the financial sector. So that's why I'm quite, I wouldn't like to say quite, but I'm a bit experienced with financing processes. So to have a brief introduction in terms of business, as any player in the industry would know that the wind energy and battery investment necessitates a huge upfront investments. So it means that a lot of upfront capex payments should be made before making any single cent. So though the mantra is saying that the operations costs are quite minimal for renewables because you don't have to burn some fossil fuels or any kind of hydrocarbon out there, but having said that, though the operations costs are quite minimal and limited, but upfront investment costs are just huge. And the upfront capex may reach as high as 80% of whole investment costs throughout the life of the project. So it's the main reason why the investors are looking for the external support from financial institutions. That's why the demand and supply are intersecting each other. And as I said, that's the main motivation why investors are reaching out to financial institutions. So as you can imagine, as anyone can imagine, this 80% upfront investment bring a lot of risks. And these risks could be in terms of both micro level, project related, whatever you call it. It could be construction risk, could be regulatory risk, could be permitting issues, could be market risk as well if your project is subject to merchant risk. But the risk could lie on macro level as well, especially in emerging market context, your project might be subject to some currency risks, interest rate risks. This stuff and this type of exposure is something you have to handle it. And you have to handle them in a diligent way to make things, especially investment, happen. So from this perspective, personally, and also as an Enerjisa Üretim, we perceive our relation with financial institutions rather than simple lender to borrower relation, a kind of building up a strategic partnership to sharing risks. So that's why I prefer to call my guests strategic partners rather than just calling them simple lenders. First of all, thank you all. Welcome. Welcome to our panel. It's a pleasure having you here. Our panelists, as I said, quite esteemed speakers, and they are coming from both domestic and global banks. Mina is from Akbank, Can is from İşbank, Çağrı is from KfW, and Mohammed, as I said at the beginning, he's from JP Morgan. Another point is that it's also great to see that the Turkish banks are represented by women, whereas global banks by men. So, so it's for me, yeah, it's another proof for how far Turkish banks have progressed on gender-based equality. So, and aside from our experience here, that more and more women are taking leading positions in Turkish banks, and I think the number will be improving in the future as well. So let's start with questions. First question. Well, as enerji üretim, maybe you have heard about that or read somewhere here, because some releases has been published here and there. We signed the largest financing deal for a wind investment in the history of Turkey. So the deal secures financing for 750 megawatt YEKA 2 installed capacity, and the deal is worth more than $1 billion. The deal is made up of 7 direct lenders and 1 ECA. So we have dealt with 8 different parties during the process, and 3 out of 8 are sitting next to me. So one is Akbank, one is JP Morgan, and the last one, the third one, is KfW. So I would like to hear from them, how was the journey for them from origination till the signing stage? Stage is yours. I think we can start with Mina saying ladies first, if it's okay for you.
Absolutely.
Thank you. This deal is not only the largest in its category, but was a rather complex deal due to the multi-party culture of it. But despite these challenges, it was a smooth and efficient process thanks to the professional team of Enerjisa and all other parties. It's an honor to be in the financing and success of the YEKA deal together with Enerjisa. As Akbank, our appetite in renewable energy investments is really high. 86% of our energy portfolio consists of renewable energy financings, and since 2016, we have financed only renewable energy investments. This commitment was supported by the solidly structured purchase guarantee models. In this regard, once again, we're honored to be part of YEKA's success. In terms of how we manage financing in Akbank, as the project finance team, we take part in the full cycle of loans, starting from the origination to risk assessment, to getting the relevant credit committee approvals, negotiating agreements, and the disbursements phase. Our large network allows us to get informed of all of the projects throughout Turkey and both our existing ongoing relationships. And thanks to our ongoing relationship with Enerjisa, we were early informed by this deal. So I'd like to thank once again to Enerjisa for being part of this milestone deal, and we're excited to see the impact of it in Turkey's renewable energy transition, and we hope to be together in future deals.
Hopefully.
Thank you.
Should I go next?
Yeah, I think you can go next.
Thank you everyone, and thanks for having me. Look, I think, I hope that you can hear me okay, and I promise I'll have to work on my Turkish so I can, so we can have this conversation as with the other kind of panels. Look, I'm equally interested. I'll give my view, but I'm also equally interested in what my fellow lenders say about the process, and just to give kind of a bit of context and background. I'll take a small step back and just introduce myself. So my name is Mohammed, and I'm part of the infrastructure, finance, and advisory team. I'm based in London. but I'm responsible for our activities in in Turkey, and but also the Middle East and Central Asia. So I look after quite a broad region with broad characteristics. And JP Morgan acted as the overall coordinator and the book runner, as well as, of course, an MLA and lender. But we had the pleasure of kind of overseeing quite a lot of different kind of work streams and kind of live and breathe the deal properly, and hence my interest also what my colleagues also thought about the process. But look, there's no shying away the fact that transactions of this nature are inherently complex, as Mina said. If nothing else, it's because of the size of it. So even if the technology is well kind of established and it's banked before, the ECA framework as a framework, it's well known and kind of it's understood. There's obviously kind of one framework to another. They do kind of evolve and kind of have their different characteristics. But the reality is, when you have 750 megawatts of anything, it becomes a sizable transaction, and sizable transaction means sizable due diligence. It means sizable number of lenders, as Veli alluded to. It means inter-creditor agreements. It means all of these complexities that come that makes it fun, so to say. The way how we started, and Veli, kind of, if you mind, I'll just go very briefly through kind of the way how we thought about this deal, and because I think we come across and we do run and book run and arrange kind of a lot of transactions of this nature globally, is to think about what the company is trying to achieve. Because it's very easy to come and say, well, you've got onshore wind, and therefore I'm going to do a project financing, and I'm just going to do it for the cheapest amount possible and for the maximum leverage. But I think what the company started thinking about early on is, of course, pricing is very important. Of course, leverage is very important. But it's also around what am I trying to achieve other than that in terms of, for example, the duration of what I'm trying to achieve. How does that interact with the underlying assets and the underlying ECA regulations? But also, what type of lenders I want on my books. And a company of this nature, assets of this nature, will have a good pool of liquidity available to them. So it becomes a matter of selecting the most coherent set of lenders that will achieve a certain objective. And in Energis's kind of point or perspective is about getting that exposure to select number of lenders, some of them here, but also we had a number of experienced DFIs involved. I think DFC is the US fund, kind of development fund, has come here for, they've got existing investments in Turkey, but this is the largest onshore wind deal that they've ever done. So snippets like that gives you an idea of the thinking behind, attracting the different kind of lenders, the different covers, and so on, for what otherwise would have been, from the outside, looks like a vanilla type transaction, but it's both the objectives behind it and the sheer size of it has made it kind of ever more interesting. I'll take a pause here and just maybe move to you and see what your views have been.
Shall I step in? I'm looking at my moderator, Veli.
Yeah, go ahead.
Well, thank you for leaving the floor. Can you hear? Okay, I think it's better. Well, first of all, I would like to thank Turkish Wind Energy Association for this great organization, and thank you, Veli, for having us lenders, having us speakers today in the panel. It's quite a privilege to be here as a speaker and be in this landmark transaction. Well, we have several roles in this transaction, to be frank. First of all, we are the ECA coordinator of this transaction. We have structured the Euler Hermes transaction. On top of it, we have provided the commercial loan, so we are the commercial lender. And on top of it, we have several coordination-related agency roles, like we are the facility agent and we are the integrator agent for all 4 different tranches. So if you allow me, I would like to share my journey with these three different perspectives. As the ECA coordinator, I mean, our motivation was to handle this highly bureaucratic process in an efficient and swift way. It's not only Euler Hermes, but also the rest of the ECA agencies. They all have many bureaucracies. They have many policies and procedures which you have to follow while making a structuring. And they are following the country rules and are all bounded by the OECD consensus. So while making a structuring in the ECA business with Euler Hermes or with some other ECAs, you have to strictly follow that guidelines. And what we try to do in this transaction, we try to be involved at the very early stages so that we can contribute more. I mean, we even provide some advisory while making the contract negotiations with the suppliers, and we try to create the framework to have an, how to say, overall benefit for both the borrower and for the whole lenders. And maybe I can say that we have a specialized team in Frankfurt, and maybe we have involved more than 7 or 8 people from Frankfurt and Istanbul, and we try to share our experience as much as we can, because we are one of the, I guess, most experienced banks globally having these Euler Hermes transactions, and to the best of my knowledge, we are the #1 globally, and we try to use our expertise as much as we can just to, reach a final, good solution for all the stakeholders. And I see ourselves quite successful, but I'm looking at my moderator whether he will agree with me or not, because Euler Hermes was the first tranche that was approved in this whole financing package. So despite all this bureaucracy, I think it was a success to have the approval of Euler Hermes at the very first stage. So that's the first part of our journey from our side. The second part, we are a commercial lender, and while making some commercial lending, the bureaucracy is less, but you are taking more risk because you don't have any covers anymore. You have to underwrite the whole exposure within your own books. So you need more diligent reviews, and you need some robust, studies. But the good thing is that we have a very good client here, Energy Sağ Üretim, and the YECA-2 scheme is quite bankable. That makes us very easy to fund the uncovered tranches in this transaction. Maybe I can also say that we feel quite successful, again, looking at my moderator, because we were among the first banks who approved the commercial tranche in this transaction. So in overall, it was quite smooth, thanks to the scheme and the borrower. And maybe the last point, we also acted as coordinators, like the facility agent and the intercreditor agent of the all 4 tranches. We finance many projects in Turkey, and but the size and the complexity, as Mohammed mentioned a couple minutes ago, that makes this transaction unique, and we are really proud of being a partner of it. And what was easy for us when we make all these agency roles, like the facility agent, intercreditor agents, we have very good lenders. The good thing is that most of the lenders, they do know Turkey, they have a familiarity with the region. And when you try to coordinate such a big transaction, I think it's really important to have some lenders alongside with you who knows Turkey, who knows the country, who knows the schemes, who knows the regulation, etc. So I would like to thank once more two colleagues for their good collaboration on this transaction. So in overall, I think that was our experience. And again, maybe to mention once more, we are very proud of being a part of it.
Thank you, everyone. Let me share my perception.
I was going to say, you should ask for your professor.
So, it is a bit hard to express my thoughts and my feelings, but to me, it has taken more than a year, maybe even close to 1.5 years. So, I should say that the road has been a little bumpy. Wasn't an easy one. The reason is that we were trying to deal with a relatively small group. I would like to say that it's a big group. It's a small group, but the thing is that the group is quite heterogeneous in terms of rules, in terms of how they are dealing with this type of deals. So that's why it's a bit challenging for us to understand and try to comply with the requirements of different type of lenders out there. Maybe I should give some extra details about the consortium. The consortium is made up, as I said, made up of 7 different institutions, but also contains different type of institutions. ECA, one ECA, Hermes is involved. 3 different DFIs are involved. 4 different commercial banks are involved as well. So the challenging part for us trying to deal with different type of counterparties out there. But that's why I said a little bumpy. I wouldn't be exaggeration to say that overly bumpy, but it would be quite naive to expect a smooth way if you are trying to solve or resolve a financing deal for 750 megawatt, as Mohammed put it. That's my perception.
Yeah. Yeah, I agree. I think one thing that I would say that it's really helped in the process. And Veli, you will remember it's the amount of preparation that we collectively have done before launching the transaction. And I think it's very easy to think that it's all commoditized now and you could kind of run these things as soon as you launch the transaction. But the reality is, again, I mean, you'll hear us reference the size quite often, and I know it's not every deal is as big, but these principles still will apply on all of the transactions, and I'm sure stating the obvious to a lot of you in the room here. Preparations around the underlying technology, the contractual arrangements, it's kind of parts of the legal due diligence, and not least, with our experience around the environmental issues. The environmental issues have become now at the top of everybody's list, and it used to be just the DFIs. Now it's everybody, all organizations, frankly, including JP Morgan, where it is one of the highest hurdles to go across for every transaction, and kind of having that understanding and command of the language that our colleagues and our stakeholders on the environmental, social, and governance side have. Preparations with that respect, I think, would be quite essential for any transaction.
I totally agree. I think if you don't have any extra comments, I think we might move on İşbank side. So to İşbank, could you please provide some color on your exposure to wind industry in Turkey?
Sure. İş Bankası has always been financing the energy sector and supporting the energy policies of our country. We are one of the pioneering institutions in the financing renewable energy projects of our country. Over the last 20 years, we have financed more than 20,000 megawatt renewable energy capacity. 6,000 of this capacity comes from wind power plants. The total loans we have extended to the renewable energy projects has reached to $7 billion in total. Our current exposure is $1.7 billion. More than 1/3 of this exposure comes from wind power plants. The total installed capacity of renewables in our portfolio with ongoing loan repayments is 10,000 megawatts. Appropriate wind measures, accurate technical and financial analysis, application of proven technologies, strong EPC and O&M contracts and the guarantees provided with respect to them, appropriate insurance coverage, and competent sponsor combination is important in the financing of wind power plants. Thanks to combining all these elements with well-structured financings, we haven't faced with any performance or non-payment issues in our wind portfolio up to now. In many cases, the projects generate excess cash to enable the project companies effecting voluntary prepayments or cash sweep in accordance with the loan agreements. The average capacity utilization rate of our wind portfolio is about 30%, which is in line with projections. So, therefore, I can proudly state that the color of our wind portfolio is green.
Thank you. And the second round will be related to YECA 4. I think everyone is quite keen to hear about the bankability of YECA 4, or at least hear about the initial assessment of banks which are sitting next to me. So as you know, I think everyone knows about that. Minister of Energy recently announced a new target for renewables, which is simply reaching to 120 gigawatt capacity by 2035. So to reach this target on annual basis, 1.2 gigawatt VPP tenders will be announced, which is the current plan. And this 1.2 will be announced, as I said, in annual basis. So though YECA 4 is including and will be including different features, I think that from commercial perspective, the most important part is the being able to sell in the market in the first 6 years and thereafter selling with a fixed price. And the fixed price will be between $35 per megawatt, which is going to be a kind of floor, and $55 per megawatt, which is going to be a kind of cap price. So I would like to hear, I think the audience is quite keen to hear about it as well, what is the initial assessment of financial institutions in terms of bankability of this kind of structure? And as I said, this is going to be a common question. I think we can start from Char in this session, from reverse order.
Well, thank you. Hi again. As KfW IPEX, we are funding both YECA 2 and YECA 3, so I can say that we have quite good experience in funding YECA projects, to be frank. And if you allow me, I can make a comparison first between all these YECA 2, YECA 3, and YECA 4, and share my opinions with YECA 4 afterwards. First of all, maybe I should say that YECA 4 is quite bankable, and we have to pay credit to the Ministry of Energy. And when we start with YECA 2, we have a hard currency sales price, you have a very good tenor in your transaction, and it was a bankable one, and it was successfully financed with the participation of local lenders and the multinational lenders. When it comes to YECA 3, the ministry made an improvement and they put a merchant period at the first 66 months, which the investors can take the upside of selling the electricity on a merchant basis. That was an upside for the investors, and that was also aiming to expedite the construction processes. What we have in YECA 4 is one step further. We have 72 months of merchant period, which also increases the upside of the investors. And the second good thing is that we have a floor price on that merchant period. So if you're a lender and if you are having difficulties to predict the merchant prices for the first 6 years, you can simply use the floor price, and I think that will work for running your cash flows. So that was a good step for having a bankable situation, or let's say the scheme. The second one is the tenor. Now we have a longer tenor. In YECA 3, the tenor was like 13, 14 years, and now the tenor can go up to 20 years, which is also quite good, because especially in international fundings like ECA, like Euler Hermes covered transactions, the tenor can go up to 22 years. And if you are making a debt sizing of 22 years, 20 years of tender price is quite good. That increases the predictability and it provides quite bankability to the projects. The third part is the sales price. In YECA 3, we have a USD denominated Turkish lira price, but it was all okay. But right now, we will have the USD prices. So I think it's also good for bankability because it's much simple and easy to understand for all the investors and the lenders. And the second good thing is that we have the floor price of 35. To be frank, what we see, what we observed during the last tenders, the investors might be so aggressive during the competitions, and these sales prices might result in a very aggressive levels. And then it makes really hard for the lenders to make the debt sizing with the low electricity prices, to be frank. But right now, we have the floor price, which is like 2.5 cents per kilowatt hour, like $35 per megawatt hour. So I think that will also provide further bankability. And if any investor would like to be more aggressive, I mean, they are free to make the royalty fee payment during the tender, and that will be paid by the equity, right, from the sponsor side. So from a lender's perspective, it's not a major problem since that will be paid upfront by the equity by the sponsor. So it is also a very good improvement in YECA 4. And the last, the local content requirement. That is something sensitive because according to the ECA consensus, there should be always a balance between the Turkish equipment and the European, or let's say German equipment. The good thing is that the local content requirement is still the same. There's not much increase in the local content requirement. So I think that will again be easy for both local lenders and the multinational lenders to finance this project. And maybe let me stop here and leave floor to other colleagues for further
I think
contribution.
it would be beneficial to hear some comments from Turkish banks as well. Maybe we can move on to İşbank.
Well, I think this new YECA will completely change the game because the general funding structure of the wind power plants is on the basis of generally 80% debt to 20% equity with around 10 to 12 or 13 years door-to-door loan maturity. Even if we run the financial model with a bit conservative electricity price, the debt ratio wouldn't fall much below 80%. Well, now if we stay within the same maturity period, which is 10 or 13 years, whatever, the loan schedule has to be front-loaded in order to get repaid as much loan as we can during the merchant period, during the period that the borrower may sell its electricity to the market price. We believe that the participants may reach the $3.5 base price in most of the auctions. When we consider the transmission fee exemptions, this figure may go up to $4, which is still low. Although the guaranteed price period is determined as 20 years following the market sale period, it's hard to assume that the loan maturity will match these periods, these 20-year periods. Therefore, the investors will be ready to make higher equity contributions for these new YECA projects. Another issue is Turkish commercial banks' cost of funding. In order to support these projects, we need to access more renewable energy funds, and these funds should be higher in terms of amount and should be appropriate to be allocated into medium or large size investments instead of only small size ones. So if I had to summarize what I have just mentioned, first of all, the maturity of the project finance loans may not be extended to cover the whole guaranteed price period. Two, due to the low guaranteed price level, these investments require higher equity contributions. Three, the project loans will be amortized on a front-loaded schedules in order to get repaid as much loan as possible during the merchant period. And the last one is local Turkish commercial banks need more renewable energy funds to provide low financing costs for these projects. That's my perspective as a local bank.
Thank you. Mina, over to you.
Thank you. Last things first, I was first emphasize that as Akbank, we always prioritize renewable energy investments and try to find the best solutions to our customers regardless of the incentive model. Of course, with a tailor-made equity ratio, collateral structure, and loan tenor, we always find solutions for our customers that they can also benefit. We welcome the launch of the new YECA 2 tender, which is really in line with the Ministry of Energy's newly announced target of 120 gigawatts by 2035. This ambitious target, together with this new tender structure, emphasizes Turkey's commitment to a greener future. The YECA 4 tender introduces a noteworthy change from the previous tenders by allowing to sell from the market clearing price together with a dollar-denominated minimum revenue guarantee. This dual approach undoubtedly protects the bankability of the projects by providing a revenue security, which we banks do like to see. On the other hand, if the tenders result in the minimum floor price, of course, the feasibility of these projects will depend on the contribution margins offered in each bid. Another positive element is, as my friends mentioned, the transition fee exemption. We believe this exemption will contribute highly to the project's return periods. In addition, faster permission processes will also benefit projects in terms of timelines. So, in our preliminary assessments, these newly introduced elements are promising, and we're looking forward to find the best solutions with our clients. To sum up, as Akbank, we're keen to be a part of these financings of these projects as usual.
To add, I think it's quite a few of the points have been rightly mentioned. I think I would be brief, and I think maybe mention 2 points that I think of when I see frameworks like the ECA4. The fact that we have a ECA4 is in itself a very positive step. So regardless of what the underlying principles of the and the rules and the specifications of the rule, the idea that we have an evolution and kind of subsequent regimes in the ECA world, if you like, is in itself very positive, purely because it enforces or reinforces the confidence in this kind of ecosystem. That's what investors want to see. Investors and lenders, and whether it's on the bank side or on the institutional side, want to see that there is a track record that's being built in the country, and it's not a one-off. If there is that pipeline, and if there is that coherent, stable, consistent regulatory regime and regulatory support, that's in its own right. It's an achievement, and I think that's something to celebrate on its own right, even before getting into the detail. The other point that I personally think that is quite important, it's that this, on the surface of it, and kind of what we know about the specification of the ECA4, does take us a step closer into trying to introduce other investors other than the banks to deals of this nature. The longer tenor and the longer duration on these, and the front tail, if you like, or the additional number of years where there is some exposure to merchant, and then it gets complemented by the full tenor of the ECA, it does give us now quite a long horizon that would be suitable for institutional investors to start looking at financing and funding these assets. And whilst obviously the funding that comes from the banks is quite integral to many of these transactions, I think I would argue that in the long term, and please bear in mind that we're not talking about just ECA 4, we're talking about an intention of having ECA 5 and 6 and 7, and there is gigawatts and gigawatts of capacity across solar and wind. And in the reality is, if that all materializes, it's unlikely that only the banks will be able to fund all of that growth. And therefore, you would want to start and look at other pools of capital. Frankly, more, I would argue, more suitable to take on risks of that nature. If you're thinking about insurance companies, if you're thinking about pension funds, if you're thinking about those institutions that have pools of funds that they need to deploy, they need to match their liabilities with assets of long nature, they're very well suited to take on risks of that nature. And I think the ECA, the kind of the new ECA 4 and the evolution and where it's moving, I think it's taking us a step closer to facilitate that. And in the end, it's all a win-win situation where you've got more investors wanting to take part of this and fund this kind of very important step along with the strategy that we have in Turkey.
Thank you, everyone. In the next session, in the next round, after asking ECA-specific questions, I would like to step back a bit to discuss the broader picture. So, if I had to express the work of banks, that I would say that it's a risk management. In 2 words, I can summarize all of their works. They are doing all these studies, conduct all kind of studies to manage risk properly and diligently. To serve this purpose, I would like, from risk perspective, I would like to ask some, as I said, general question, and the first question goes to KfW and JP Morgan. So, yeah, I know, and as anyone knows, that they are active in many different jurisdictions as well, alongside Turkey. They are quite active in different markets. So, I would like to hear their comments, how they would compare their experience here in Turkey with different jurisdictions, especially from risk management perspective, how they assess risks in Turkey vis-a-vis other countries in which they're active. Let's start with Mohammed in this.
That's a hard question, so let's start with Mohammed.
But look, you know, it's. I mean, I mean, you ask my wife. I've been here too many times. She says so. It's a signal of how bullish I feel about the Turkish market and kind of how we view the Turkish risk. Look, there's no risk-free jurisdiction. There is no risk-free investment. But I think I touched on the consistency of the regulatory regime and the regulatory support on one hand. But that's something I feel we kind of covered. But the other one where we see very favorably in the Turkish market is the inherent demand of energy. And what we kind of, you could, from whichever angle you look at this, the demand that we see in the market and the dynamic between the supply and demand, it's really encouraging, and it's something that we really I think we see favorably in the Turkish market. These are kind of two points that we really value in the deals that we assess across the technologies, regardless of what technologies we're looking at.
Well, thank you for sharing. And for KfW IPEX perspective, maybe I should start by saying that as KfW Banking Group, we have a history in Turkey for more than 50 years. I mean, back in 1970s, we have financed the first Bosphorus Bridge, and then we financed many power plants, motorways, like the aircrafts of the national air carrier of Turkey. And on the other side, on the global scale, we have financed many transactions like offshore wind parks in Europe, or let's say airports in Latin America, or cruise ships in Far East. And we closed, by the way, last year with 24.6 billion euros of new commitment. That was quite successful. And I will combine it with your question. I mean, this success comes from, I think, with two perspectives. The first one is providing the tailor-made financial solutions, and the second one is the risk management. In Turkey, you have to be adaptive and proactive in the markets, not only to just follow the business opportunities, but also to understand the risks and make the real, reviews in a diligent way. For instance, you can easily finance a wind farm in North Europe by sitting your office in Frankfurt and only make a couple of visits, but it's nearly impossible to make a finance in Turkey if you are not on the ground. That's why we have an office in Istanbul, and we are acting as the first local contact point for all the investors and the investments of Turkey. So I think the local presence is, as Mohammed mentioned, he's coming regularly to Turkey. Being on the ground is the first mitigant to make this risk management. On top of it, of course, we have some other mitigants, like we try to use ECL loans as much as possible, because when you make the ECL lending, then you don't have to underwrite the whole exposure. I mean, for instance, for the renewable energy, your Hermes can cover up to 98%, which means that you only need to underwrite like the 2%, the remaining part. So I think it's wise to use ECL loans in Turkey, because it's a dynamic market, it's a growing market, it's an emerging market, and it's not always easy to forecast the risk, because there are economic risks, there are political risks, there are cultural risks, so you cannot quantify all the risks at all the time. Therefore, I think the ECA is a very good solution for countries like Turkey, and that's why we are using widely the ECA products in our fundings in Turkey. And on top of it, from time to time, we make commercial lendings, but again, I will combine it with the second one. We try to combine it with the ECA lendings, because if you make, I mean, a good, how to say, breakdown between the ECA and the commercial, then I think it's a very good way to manage your risk in Turkey. So that's not the must, but let's say nice to have.
Sweetens are my favorite combination.
Indeed, yes.
Okay, Thank you. And the next question is going to the Turkish banks, to Akbank and İşbank. What are the biggest risks sitting in your wind portfolio? What type of risks are distracting your sleep during the night, or if any? I think we can start this time from İşbank as well.
Thank you. Well, obviously, that the wind doesn't blow. There are changes in the wind regime of our country in addition to the equipment degradation, normal wear and tear. Very low or extreme wind speed is not good for wind power plant. It reduces the generation. And the equipment and the technology is selected by the investors considering the wind measurements of the project site. You need to stop the engine when the wind blows so fast in order to avoid damaging the equipment. And similarly, in very low wind speed, you may even not generate. So this is my number one. During the project lifetime, there is the need to renew or replace the equipment. This may be due to malfunctioning. This may be due to breakdown caused by natural events or bird heat, etc. So my number two is that the equipment supplier not manufacturing anymore or shutting down its manufacturing plant in Turkey, which may extend the supply periods. We have ring-fenced project finance structures which even protect the project from its sponsor. So our concern is not directly related with our wind portfolio, but with the externalities that I have just mentioned. Thank you.
Mina, over to you.
Thank you. At Akbank, we have deep expertise in energy financing with a special focus in renewable energy financing. And our view is that the renewable energy sector has a relatively predictable risk profile, and it's one of the stable sectors for the banks to fund. The first risk we see here is the merchant price risk. As you know, banks were historically hesitant to take merchant price risk, as market prices can be unpredictable, creating long-term revenue uncertainty makes banks cautious. However, as Akbank, our expertise enables us to structure frameworks that can protect both the banks and the customers. Another factor we watch closely is regulatory risks. Regulatory risk can affect revenue streams and profitability, especially ones that affecting the already operational projects. This can create a shift from our initial projections, but to cover this, we build conservative models that can withstand fluctuations. And finally, project permission delays are another concern, but thanks to the new tender models, we see that these will get faster soon. In summary, we're optimistic about our wind portfolio and the future of wind energy. With clear regulatory frameworks and efficient project timelines, of course, we believe the wind sector offers a stable opportunity for long-term investments.
Okay, thank you. I'm going to ask my last question, and the last question will be related to battery investments. So battery investments will play a vital role in the energy mix because ever increasing renewable share in the energy mix gonna lead to some problems due to their intermittency. And to tackle these problems resulting from intermittency of renewables, the batteries will be playing a very important role and will be probably a key item to suit the fluctuation which may be led by ever-increasing share of renewables. So as you may know, over 30 gigawatt capacity has been recently allocated. Licenses are obtained. So from this perspective, I would like to ask to our financiers that what's going to be their assessment in terms of bankability of battery investment with given current conditions. And this time, I think we can start with İşbank. Go ahead, shoot.
Sure. Well, the storage investments are critical in terms of availability, energy security, and also potential tool to regulate the electricity price. Batteries will play a vital role in regulating the imbalances in the system. They enable imbalances between production and demand to be managed more effectively. It makes the energy supply more stable, considering the volatile production of solar and wind. As a result, the batteries are effective in both increasing the energy security and minimizing the effects of the imbalances in the system. However, there is this unit price discrepancy. According to the presidential decree, the YEKDEM base unit price for wind facilities is $4.95, and the YEKDEM unit base price for wind facilities with storage is $5.85. It's understood, according to this presidential decision, that the $4.95 will be applicable for the energy given to the system without storage, and $5.85 will be valid for the energy given to the system through the storage. On the other hand, it's stated in the storage activities regulation that the electricity generated within the storage power plant will be given to the system through the storage units. So it's anticipated that the floor price of $5.85 will be applicable for the whole generation of the storage power plants. At that point, it's really important to clarify that a floor price of $5.85 will be applicable to make these investments financeable and feasible, bankable. Contradictions in the legislation slow down the financing. Another aspect is the improving technology. So the investors should make sure that the selected technology wouldn't become ineffective within the next few years. So the improvements in the market should be closely investigated. We need very solid, long lifetime and cost-effective technologies. Lithium-ion batteries are at the moment dominating the battery storage markets, but these batteries are only economic to store energy for limited hours. If the wind doesn't blow for a couple of days, or there is bad weather conditions for multiple of days, we need to store energy for longer durations in order to cope with this volatility. Another aspect is lithium is a very valuable commodity. Other metals that go into the current battery systems are also highly valuable. We need to investigate cheap raw materials. Batteries are too expensive, but on the other hand, they have a time frame. Now, the battery you put in a container next to your wind farm and the one you put in your electric car are same. Stationary applications should be cheaper in order to make them worthwhile, financeable, feasible, and financially viable. As the battery is expensive, the sole storage investment is not feasible to finance. Therefore, the lenders make consolidated feasibility analysis, including the main power plant, solar or wind. In either way, the projects combined with storage technologies will require higher additional equity contributions. Renewable cost of the storage facility during the lifetime of the project loan should also be considered, because this capex is important. It reduces the net cash available for debt service. At the financial feasibility stage, the capex and the maintenance costs should also be taken into account. Beside all these issues, I'd like to re-emphasize the importance of the unit-based price, the floor price, to be applicable in order to make it more financeable from the lender perspective. Any price below $5.85 would make the investments, would make the financing a bit hard, and the lenders may need additional security, additional cash flow, or we may only create full recourse structures during the lifetime of the loans.
Thank you. Chair, over to you.
Well, thank you again. I will mention 4 aspects. As a lender, we need predictability, that's for sure. And what I mean by predictability, we would like to see whether the debt service payments, like the principal and interest, will be covered enough by the revenues of the project. And we have to forecast the cash flows. And that's why I will mention 4 issues which I see still we need some clarification. The first one, as Canan rightly mentioned, the sales price. Right now, we need some clarity. I mean, whether the sales price will be 495 or 585, because according to regulation, it's not clear that whether the whole generation is eligible for 585 or the only part that passes through the battery is only eligible for 585. So that increases the feasibility a lot, and we need some clarification for that point. What I know, the regulators are already having some discussions on this point, and that's something on their agenda, and hopefully we will see some clarification on the sales price. Second one, the local equipment. It is, as I mentioned in the early phase of my speech, it is quite important, because if you put local content, then you can get the incentive of the local content, so you can have a higher sales price. However, that also reduces the ECA loan. I mean, ECA is the most attractive product for wind financings in Turkey, so there should be a balance between the local content and the European content. And the problem for the moment is that the local incentive scheme is not determined yet, it's not clear yet. So I think if we can have some clarity on the local content incentives, I think that will also bring additional feasibility for the battery investments. The third one is the capacity factors. What we observed so far in the market is that most windy parts, let me put it in that way, or the sites that have the highest capacity factors, we have financed already. What we see with the battery projects, we are now moving on to the eastern parts of Turkey where we have the less capacity factors. So I think that will also affect the feasibility of projects, and in the end, we may end up with having low debt to equity ratios while funding those projects. So I think it's a project based, or let's say unique to each and every project, depending on this predictability. And the last part is the battery investment costs. For a lender, it's not an easy to understand the upside of this battery, because there are so many arbitration opportunities, etc., etc. But from a lender's perspective, to be frank, we only see it as an upfront cost at the beginning. So that increases the overall funding requirement, and which means that that's an upfront cost, increasing the total project cost. And the good thing is that we still see some decreases in the battery costs, like globally. And I think if the price levels of these battery investments settle down, so I think that will be more clear for all the lenders. So it's, in a nutshell, these four are the important things from my perspective.
Thank you. Mohammed, over to you.
I think I'll just add from a global perspective, just away from the tariffs and away from the kind of the Turkish market specifically. We look at them. We look at battery investments across, globally, and I think it's a funny asset class, because obviously from a construction point of view, it's rather assembly, and that's as opposed to some other classes. We don't spend so much time on construction and so on. But where we do spend time is two places. One is around I would say around the kind of how long it takes for this to pay back for itself, and it depends of what application it also has, and what strategy you're following. This has an aspect from an economic point of view, but I think in the immediate instance, more importantly, for how these assets are expected to operate in the long term and what the shelf life is for them. So in other markets, you've got arbitrage development kind of aspect, where you're relying on not only ancillary services, but you effectively, as a developer, as an owner of the asset, you're just waiting for the electricity price to go up, and then you deploy them, similar to how developers would treat CCGT assets, for example. Yeah. The challenge that presents is the fact that suddenly you don't know exactly what the charge and discharge profiles look like, and therefore, from a maintenance point of view and from a shelf life, it becomes more and more uncertain. That is kind of the biggest issue now when we're looking at financing and investing in batteries, is if we don't know how they will react, because that means some assets will need replacement in 15 years, and some assets might need replacements in 5 years because the profile, the up and down, it's not consistent. So operationally, that's the main challenge. What we spend a lot of time on as well, and not going to be a surprise to anybody, is the supply chain of these assets. Even before we get to the economics, even before we get to kind of whether they make money or not, or whether they're kind of the capex figures, is where do these come from? Who's manufacturing them? What warranties come from them? What's the likelihood that these will be manufacturing this type of assets for a long time? And the underlying material, where does it come from? Where is it mined from? Because as we kind of mentioned at the very beginning of this, it's kind of a full circle, but the environmental aspect of things and the social aspect of things are so important. So even before we look at anything else, we look at the supply chain and whether we can get comfortable or not with that, then we start looking at the underlying economic model. But hopefully that gives you a bit of color across jurisdictions.
Sure.
Thank you. There is no doubt that the energy storage systems will play a critical role in Turkey's energy transition. With this, battery storages, renewable energy projects will be able to act as baseload plants, making them even more crucial to our overall energy supply. At this stage, all of the projects are unfortunately still in the pre-license phase, and as Akbank, we're closely monitoring the process and hope it goes fast. Based on our preliminary assessments, of course, on the cost side, apart from the projects we use to finance, there will be a battery storage capex component, as my friends mentioned, and this will be a crucial factor in determining the feasibility of these projects. The required battery capacity for a 1 megawatt plant is a significant factor in the capex, and any potential change in this can affect the feasibility significantly. Also, while there are investments in Turkey on battery storage, whether these units will be important or locally supplied will be another consideration for investors. On the revenue side, as you know, we banks do like to see a minimum dollar-denominated guarantee. These projects actually have multiple revenue streams, such as sales under Turkish lira yektem and market clearing price, together with additional revenue streams such as energy arbitrage, imbalance management, and frequency control. Although projecting these revenues are a bit challenging, they will also play a pivotal role in determining these feasibilities. However, the lack of a detailed roadmap right now, as Çağrı and Canan mentioned, for this policy introduces uncertainties at this stage. And as soon as these regulatory details are finalized, we will be in a stronger position to provide accurate assessments and solutions to our customers.
Okay, thank you. Thank you for your insights, for whole assessments, and for your thoughts. I think that assessment, that comment, marked the end of our session. If you don't have any questions.
Kıvanç Enerji, Mehmet Kıvanç.
Kıvanç Enerji, Mehmet Kıvanç. My question is to Frau Mina and Frau Canan. YEKA projects, you know, and you know the battery projects. So do you prefer to finance YEKA projects or are wind energy projects with storage capacity? Like I told you, we as Akbank have a high appetite for renewable energy projects. So we have to do the assessment in regards of the project, because the income component it does not maybe change, but the capex component changes, and the capacity factors are different. So one project, For us, it's not possible to say this project we would prefer, and like I said, we need a further clarification for the legislation to battery storage. And Chara and Janan also talked about it, that also in terms of price, there are some uncertainties. And after we have all the data, then we can have a comparison. So similarly, in the battery storage systems, the price is important. So if 585 will be used or not, because when the number is going down to 495, then there will be a problem, and then the banks will be looking for guarantees from sponsors. But if the price is right, then we are open to investment in both areas. In YECA projects, the price range is low. So we're talking about a long period of 20 years to sell into the grid. But none of the banks who are giving loans will have a time for 20 years. So we will go for half of it. And there are some payments for the YECA projects, for YECTEM projects. So we are leaving these projects. So we don't give the licensing with market prices. So these will be substantiated. So there we will need more investment from the investors. So it will be for the disadvantage of the investors. That is my prognosis. But another advantage is the transfer cost. So this will be put down from the price, subtracted from the price. So it will be around $3.95. So it will be also low. So we need stronger financial sponsors who will go into this area. Maybe this is an assessment. I can give it to you because small investors will buy for $3.95 and sell for $4.35 and have to pay the rest from their own pockets, and that won't be very. People won't show a high appetite for this type of deal. So maybe a last question.
Thank you. Thank you, everyone. Thank you for your time. Thank you to our audience and our esteemed speakers.
Thank you.